Ah, thank you, sir. Thank you, sir.
So good to see you. So good to
Good to
see
see you too. Good to
you.
see.
How are you
This,
feeling?
this has become the norm.
I know it has. So folks, let me first introduce everyone to Fabio Gulla. He's from NJ Lending, and I have done multiple transactions with him. Fabio is a great guy. He knows what he's doing. He keeps us going, keeps us on track, and I will have many more deals with Fabio in the future. So, okay, I will have all of his information in my post, of course. You definitely want to work with Fabio.
I appreciate that.
So tell me what's going on in your life. Everything's good?
Yeah, I mean, thank God we are, healthy, happy, COVID's free. I don't know anybody in my immediate family, thank God, that has it. I do have a dear friend right now that was on life support, believe it or not, in Hackensack, but he's getting better.
Oh man, that's so good to hear.
Slowly and surely he is. He's getting better. The randomness is what's so scary, right? I mean, yes, there are so many people that are, thank God, walking out of the hospital fine or home quarantined without any issues, but it does seem like a random roll of the dice with the people that or you can get deathly ill and
Yeah.
it can be over for you in 5 days or less, which is
Yeah,
scary.
that's what's
Sure.
so scary. That is what's so scary. We just and for some people they get such light cases, and some people it kills them. So it's just
Yeah.
very scary. So,
Yeah,
but how is this affecting your your mortgage life? I mean, that's your business is based upon people being able to obtain mortgages and get their houses. What's happening? Yeah, just a lot of questions like what's going on in general, the interest rates.
Right.
We can tackle the questions one at a time. Where are interest rates right now?
Well, funny you should say. We are, one man's pill is another man's poison, right? On a purchase side, a little difficult because, on a purchase side, it requires, a sale, a realtor, a buyer, a seller, kind of getting together and establishing a market moving forward. Now, on the refinance side, we've caught a little bit of lightning in a bottle, so to speak, because COVID has done a lot to really decrease the rates exponentially very quickly. So there's an opportunity there for people to refinance for sure. That's not a plug, but it's just to answer your question, okay? But respectfully, on the purchase side, somebody asked me this morning, Fab, is this a great time to buy? Well, buy low, sell high, right? It's still the same thing. Obviously, you don't have the availability to the homes because physically you can't see them. However, if you can work with the realtor, once again, not a plug, but a reality, yeah. If you are close to making a decision on something, tonight's a great time to do it because you, the buyer, correct, a little bit more of a bargaining tool at the moment, sure, and interest rates are still exponentially very low. So on the conventional side, status quo, very low interest rates. Now, first-time home buyers side, FHA.
Yeah, I heard FHA is, and people must have much higher credit for
correct. On the FHA side, things have changed. Everything we do in our industry is risk-based. And as a result of that, the FHA, typically FHA is a catch-all, right, for lower credit scores, mortgage events, credit events. We can take $1 and stretch it a little bit more in the FHA world, but as a result of that, there's additional risk associated to those buyers. So FHA, in order to stem the influx, they increased their rates, kind of tightened up a little bit of their guidelines because, those borrowers, if, God forbid, they don't get back to work as quickly as, let's say, somebody else who was salaried and just furloughed, a lot of the FHA clientele are, hourly wage earners. And right now the hourly wage earner is really impacted by what's going on right now, right? I mean, a lot of the salaried guys are home. They're working from home. Guys like you and I, right? We're hustlers. You got to get up and hunt every day. If we're not
correct,
somebody trying to sell something, all of it is just good intention for us at this moment, you know? So it impacts people like you and I, for sure. So as a result of that, FHA kind of has tightened up their requirements a bit. But
I'm sorry, if someone had a process going, they had an FHA loan that was already approved,
Right.
they're still employed.
Right.
Are there deals, and they had a rate lock? Would that deal still be going through, presuming that they are still employed? I mean, because God forbid something happens, like even the day before you're supposed to close, if they lose their job, or I mean, I guess for even a conventional applicant, if they lose their job,
You're in trouble.
the closing won't happen, right?
Correct. So to answer the first half of your question, even though the guidelines have changed, if you're in process, they honor the original agreement, right? Interest rate, conditions, credit score, things of that nature. If your credit score changes, however, and it happens often, we start the deal in February, your credit score is a 700. By the time sometimes we end the deal in April, your credit score is a 650. Now all of a sudden you don't have a deal anymore.
Wow.
That becomes an issue.
Yeah.
With respect to working, correct. So even in non-COVID times, the rule and regulation states that at the time of closing, you need to be gainfully employed. Period.
Yeah, you have to pay for your mortgage payment.
You got to make your mortgage payment, right? I have a situation right now, a gentleman who is 30 years on the managerial level of his trade union, New York City. Gentleman makes very good money, multiple properties, much money in reserves, just about to close on a property, right? The seller postponed this closing because they just dragged their feet, and this guy was just so accommodating. He really was, Ira. Nicest guy. We'll close when we close. I'm going to buy the house. It's not an issue. It's where I'm going to live. An extra day or two doesn't matter. Well, wouldn't you know it? COVID comes into play. He's furloughed.
Oh, no.
He's a union guy. He has to wait till he gets his next job before we can close this loan.
Hey.
But what becomes a bigger problem, right? You and I are on some time frames, right? We got a seller. It's a domino effect. Our industry, me and you, it's a domino effect, right? We got sellers. They got to get out. They're buying a house. Somebody's buying their house. It's this movement forward. Interest rates expire. Rules change. So things need to kind of fall into place perfectly. That's why they say, here's our contingency date. Here's our closing date. These are the milestones. We expect to hit them. We hit them for a reason, not because we want to push people into the next thing, but there's a domino effect. So the irony of the whole thing is that, at some point in my industry, you have to deny the deal. You have to say, I'm sorry, you're not meeting the requirements of the contract. You got to kill the deal, which means he could lose this house.
Yeah. Wow.
Listen, we find ways for that not to happen, but at some point, COVID's is the exception, not the rule.
Right. So right now on April 10th, 5 days before what would have been tax filing time, what are the current interest rates for a 30-year conventional mortgage?
Well, let's do this. We'll do single family residential, conventional, 25% down, 750 credit score, 45-day close.
A really good profile.
Really good program, typical vanilla, very nice, no issues. We're around 3 1/8, 3.125.
Wow, that's
exceptional rate. It's exceptional. It's exceptional. I mean, now conversely, you flip that into an FHA, and that person's almost in the 4s.
Wow, yeah.
Believe it or not, because FHA just simply wants to stem the tide of FHA.
And would it matter if the FHA had, I guess if an FHA had 10% down, they probably would, you'd say go conventional.
Well, correct. So the whole thought is that conventional seems to be a little bit more sympathetic to that credit score these days.
Yes.
So you'd want to see if you can get somebody into conventional. Look, there's a lot of other reasons why you want to put somebody in a conventional deal versus an FHA, but it still boils down to the individual characteristics of the deal.
Yeah. Okay. So what else has changed? You and I are working on a deal, and I know that one of the things that has become very, very different are
the appraisal. Yeah. So what's happening with the, so here we go. One man's pill's another man's poison. What's happening with the appraisal is actually kind of good, we'll say, for today. So on a traditional purchase, the language of the lay of the land at the moment is they can do a desktop. A desktop is where an appraiser doesn't necessarily even have to leave the comfort of his office. He's going to rely on the information of the listing agent. He's going to rely on tax information. He's going to rely on all sources that he can legitimately get to that can give him as much information on his house as possible, which most likely is going to be you and the seller agent. Okay?
Right.
Well, you're on the sell side. So, which is kind of good. On refinances, they're going to do a drive-by, which is great because the appraisers themselves don't want to go into the home as much as the applicant doesn't want you in the home.
Yeah, no matter how much people say they're going to sanitize.
Yeah, you can't always trust, and you know, you have to really just err on the side of being cautious. Now, cash out refinances and jumbos and high balances, you got to get into the house because now it's a bigger mortgage amount.
Yeah.
So there's greater risk there. So you got to get in. But what's also very interesting now on the closing side, though, is the closers. Same thing. Technically, they've got to close somewhere, right? Where you put people in a room, right? So NJ Lenders has created a safe room for everybody where we will diligently keep people out, meaning if you don't, non-essentials do not go in.
Right.
And we get it sterilized after every meeting. So we provide that. But I also know that, you know, closers are pretty much dropping the paperwork at the door, visually checking ID, right? Because a closer is what? He's a professional. He has to make sure, he has to attest to the.
Yes, know that the people are really who they say they are.
People are really, right, who they are. Thanks for saving me. You're right, he's got to know. He's you know, he's a professional witnesser, so to speak. So unfortunately, in the state of New Jersey, you can't do a DocuSign or a virtual close, from what I understand, but you can do something as the docs are at the door. Let me see your paperwork, sign, get in and get out, and kind of leave it at that for now.
You know, a closing that I have that was supposed to have had to happen today, and then was moved to Monday, and it might be moved to Tuesday. All the documents have been signed by the sellers and buyers, and everything's been mailed to the closer, or it will be mailed to the closers once we know the exact date.
Right.
But, and no one's, because they didn't want anyone in the room.
In the room. That's called mail away signing. Yeah, so mail away closing. So yeah, that can be done for sure.
All right. And what? Pardon me?
No, for sure. It's one of those times, you know, we're making it up as we go along.
Yeah, wow. But because bottom line is people still have to move. Yeah, people have reasons that they must sell their homes. Or they must buy homes or rent or whatever. So it's got to happen, which is why we're very lucky that this has been declared. We've been declared essential at this point.
Isn't that the? My mother's been telling me I'm an essential my whole life.
Well, she should.
She said, but isn't that the irony of life, where, you know, our industry is considered an essential because it is a big part of the gross national product, right? Meaning, from the top down, real estate fuels so many aspects of the economy, right?
Yes.
From just the buying and the selling, the construction, all the attorneys, the appraisers, the different laws, the litigation, the mortgage money, the side, the lenders, all of the processors and underwriters. I mean, from the top down, you know, as much as we like to walk around self-important, you know, we really do have a bigger purpose here.
Which is why the moving companies are also essential, because they've got to get.
Oh my God, the moving companies, yeah, sure.
You know, and there was even an issue in my building that someone was saying, well, we can't let the movers in. I said,